Moving averages are among the most popular and widely used technical tools in trading. Because they are used by so many traders, it is worth having them on your charts to know what other traders are looking at. Often, if the trade strategy takes the using more than one moving average, often combinations of what to fast moving average. In this video, I will follow the approach and spin the slightly different way to give you the fresh representation of the revelations to use of the moving average in your trading. So a moving average strategy can help you to not only identify the average trading but also trend strength. For these reasons, you can use more than one moving average, slow moving average of the 55 period, and fast moving one of the 21 period. Why this picture particular numbers? Because 21 and 55 are Fibonacci numbers, but you can backtest the change of the value of the average as you like. You just need to learn how to read price actions using this approach. So 21 and 55 moving average, this setup will provide the clearer picture of the trend strength on this slower and the faster time frame. First, let me point that this is not the crossover strategy. While such strategy moving average is perfectly acceptable and valid for some traders, I prefer to think slightly outside the box and pay attention to the specific representative patterns when the combining a slow and a fast period of the moving average. Now remember that moving average indicates conditions in the markets. They are not surface signals that tell you that to buy or sell. When we would use them as the technical complement within our trading methods. The main goal behind using the shorter period moving average with the longer one is simple. We are looking for the both perspectives in the making or a more informed design, while the 21 shorter than moving average will be located more closer to the price resulting. In more touches, the 55 moving average gets touched less frequently during the normal trend market. There exists, however, a different percentage to the following the patterns of the slow and fast moving average in the relations to the price actions, and I call the contractions explains principles. The contracting explains principle is derived from the Bollinger Bands indicator. This principle is not based on the moving average crossing over, but rather the distance between the two moving average as the indicator of the strength of the trend. When the strong trend, the price will pull the 21 MA with it, which it turns will derive further than from the 55 MA. Causing the large gap between the two moving average. This is explanation as the price pulls back to the transactions into the sideways pattern. The moving average will close in together, often creating the contractions. We want to the price to bounce right off this dynamic zone and break out into the trend. This example illustrates how the two MA behave when the market is trending. We have to dominations downtrend displaying frequent but short pullbacks. Notice how the distance between the two MAs is fairly considering to reflect the smoothest and consistently of the trend itself. When the market does pull back, it bonus fairly out accurately from the 21 to 55 dynamic zone. Price actions pattern I notice is very common during the strong trend conditions. In this other example, notice that this explained pullback and behavior of the moving average. We have here what we call the contractions of the MA caused by the extended pullback into the downtrend, especially the 21 MA gets pulled back up with the price near 50 MA, narrowed the gap between the MAs. If the trend is strong enough and other factors permit for the trend to continue, we can expect this pattern to the MAs release price backs in the directions of the trend. Keep in mind that like most technical indicators, moving average are lagging, which means that they react the price rather than the price react to them. That also means that the contractions of the MAs it's because of the resumption of the downtrend, but it's rather an effect the price resuming the trend. Here we are looking at the uptrend that slowly transactions into sideways market actions. Each of the pullbacks into the uptrend causes the slight conditions of the MAs, resulting in price shooting back up sharply. But as we approach potential key resistance around the road, number of the expanding pullback does not result in the price shooting back up sharply. You should note that as the price tried to resume the trend after the last pullback, it started to the crossover point for the two MAs and actually reserved back pullback. This is usually a very strong indicational that we are either entering a period of the sideways actions, preparing for the deeper pullback into the dominant trend, or entry reserving the trend. So this is the first setup of our strategy. We analyze price actions to find out the contractions in the moving average, especially a pullback into the dynamic support and resistance area determined by the two moving average. By watching how the price behaves at its pullbacks to the dynamic zone, we can analyze the momentum present in the current move. Remember that after the pullback to this area, we are looking for the sharp move. Move back into the direction to the trend. Next, we need to add another aspect of our analysis. As said before, we are looking for the resumption of the trend at the dynamic zone. It helps to analyze if the trend has room to proceed. Does the dynamic zone also Does dynamic zone line up with the round number of the major horizontal support and resistance zones? In this trend, headline into the keys swing high-low. Answering these questions will help to the blind and overall understanding of the market and can help to give important signs of the fine-tunes your entries and exits. The final steps into the trade breakout after the price resumed in the additional directions and the price was unable to break below the dynamic zone of the two moving average. So the chase breakout, a momentum move, the directions of the trend after the identified strength in the market, meaning that the price found support and resistance in the dynamic zone. This means we have the buying power in an uptrend or selling power in the downtrend, and the dynamic zone formed by the two moving average and the aim to ride the momentum wave. But we need a breakout. We want the trend line breakout or the swing breakout. In this example, we have the dynamic zone, which basically acts as the magnet, because when the price is too far from it, it tends to the pull price back to this zone. Then, as the price was unable to go over, which is the key in our strategy, as we want to see the strength or buying power, we also have to break out, play here out of the range pattern of the trigger triangle patterns indicated by these lines. So we have to the price actions based on the entry with the strength knowledge of the candlesticks patterns and price actions in the very important. This is because you will be looking for the reversal candlesticks patterns on this area. Patterns such as Engulfing candlesticks and pin bars are ideal to the trade entry. Because the strategy is based on the dynamic zone in the form of 21 to 55 MA, we will also use these dynamic areas as our basic setup. Our stop loss below or above it, depending on the trade we take, in this example below it. This is the conventional stops. The move average stop is below the most recent corrections. As for target, I aim for the least 1 to 1.5 risk reward ratio. Here's the short setup. We have the contraction zone here tested several times by the price. Observe that price was unable to go through this area. This means we have to the active sellers in this zone, ready to push price back down. We enter short after the breakout of this range. You might think, why we have to wait for the breakout and why not entering short when the price was in the contraction zones? Well, because in the area time we don't know if the price will identify and reject the dynamic area. It might push through the zone and go the other way. We need to declare a sign of the confirmations that price wants indeed to go lower. So don't try to gamble and enter area without breakout confirmations, because that's not the point of this strategy. So to be crystal clear, wait for the price to return to dynamic zone. The 2 moving average must not cross each other during this pullback. And after the price rejections of the dynamic zone, search for the breakout in the directions indicated by the 2 moving average. The best tip I can share with you is to always pay attention to the slope of the 55 moving average. The slope of the 55 moving average can tell a lot about the strength of the trend. When the 55 moving average shifts from the strong point upwards during the bull trend to go sideways, it can provide early warning signals about the shift in sentiment. So pay attention to it. Here's a several example of the valid trade. This is not the perfect strategy. You will encounter in losing trades, and for these reasons you could add your personal spin on it. Additional confirmations or other type of the analysis. Just make sure you don't overcomplicate it and stick to the main concept if it's strategy rejection of the dynamic zone and momentum move in the direction of the trend. As always, if you learned something new and found value, leave us a like to show your support, subscribe to our channel and click the bell icon to stay in touch when we release new video. Until next time.